Hello and welcome back to Trading Club 7U lesson number 54, Strategy Building. We're finally getting to the good stuff, and that's testing our trading strategies. Today, we're going to tackle forward testing and paper trading, and I'm confident you'll leave this lesson feeling much clearer on how to move forward with your trades. You might be thinking, what's the difference between these two concepts? Or maybe you're not even sure what they mean. Don't worry, I'm here to guide you through it in simple terms. Forward testing and paper trading may seem like the same thing, but they're not, or at least not exactly. Forward testing, or sometimes called hypothetical testing, is essentially simulating your trading strategy on historical price data. You'll take your trading setup, let's say a moving average crossover system, where if the 50-day moving average crosses above the 200-day moving average, you buy, and if it goes below, you sell. You apply it to a bunch of old data, to see how it might have performed in the past. It's like testing a new software app on older computers to see how fast and stable it will run. You take your setup and plug it in to see how many trades it would have given you if you'd been trading years ago. Now, this sounds great, but there's a catch: historical data doesn't guarantee future performance. Prices could be vastly different now, new events might be on the horizon, so it's essential to keep that in mind. Let's say your strategy had a win-loss ratio of 60 using historical data. You'd see that 3 out of 5 trades were profitable. You can't take that to the bank, because it might be the same in the future, but it also could be wildly different. If, for example, you're trading the S&P 500, in the past it was mainly driven by the US economy, but in the future, it might be more influenced by global events. So, you can't simply assume past performance will continue. This is where paper trading comes in. Paper trading is essentially trading with fake money on a trading simulator or on a piece of paper. You'll still apply your strategy, just this time, you'll be putting up pretend money on each trade. The goal is to get a feel for what it's like to trade with real risks, but without risking any real capital. It's not as exciting as real trading, but trust me, it's worth it. You see, a common mistake beginners make is thinking their strategies are winners right off the bat, just because they seem profitable using historical data. They get caught up in the excitement of making money from past data, and they might not realize that most trading strategies fail in the long term. It's like buying a stock just because it's been trending up for a while. The harsh reality is that markets are always shifting, and what worked yesterday might not work today. So, before risking your hard-earned cash, make sure you've forward tested your strategy, and then tested it further using paper trading. Let me walk you through a practical example. Imagine you're using a moving average crossover system on the Eurust currency pair. You forward test it, and see that it had a 55 win-loss ratio using historical data. That's not a bad start, but you still want to test it further. You then use a trading simulator to apply the strategy to real-time data, but with fake money. You see that over a month, you've made 15 trades, and 8 of them were profitable. Your profit margin is 22, which is okay, but not spectacular. Now, that's when you know you need to refine your strategy and try different parameters. Now, here's your practical exercise for this lesson. Take a trading simulator or a piece of paper and apply your strategy to a few markets using fake money. See how many trades you'd make if you were trading with real capital. Then, calculate your win-loss ratio, your profit margin, and other important metrics. Make sure you're paying close attention to a few things. If your strategy has a high win-loss ratio, but it's because you're only taking a few trades per month, that might not be a sustainable approach. You want to aim for a balance between profit and risk. Don't expect to get these numbers perfect on the first try. It's all about testing and refining. Remember, trading is a journey, not a destination. You also need to pay attention to another crucial aspect: risk. How much are you putting on each trade? Is it too much or too little? Remember, risk management is a critical part of a successful trading strategy. Now that you've got an understanding of forward testing and paper trading, it's time to dive into the next step, risk management. That's what we'll be covering in our next lesson, number 55. For now, keep practicing and learning. Remember,